I always say tariffs is the most beautiful word to me in the dictionary. Tariff or tariffs.
This is a direct attack.
In April 2025, President Donald Trump enacted sweeping tariff measures, marking a significant shift in U.S. trade policy. These tariffs, affecting imports from numerous countries, have sent ripples through both the U.S. and global economies. Let's explore what these tariffs mean for the United States, how they are impacting the global economy, and what it could mean for the future of international trade. While tariffs are not a new concept in international trade, the scale and intensity of Trump's tariffs are unprecedented. These measures are designed to protect U.S. manufacturing, encourage more domestic production, and reduce the U.S. trade deficit, but the effects are far-reaching. In April 2025, President Trump signed an executive order imposing a 10% tariff on nearly all imports from more than 60 countries. On some goods, especially from China, the tariffs are as high as 67%. This is part of a larger America First trade strategy aimed at reducing the country's reliance on foreign products. The United States, under Trump's leadership, has engaged in aggressive trade policy. The tariffs primarily target countries that, according to the Trump administration, engage in unfair trade practices. The Chinese tariffs, in particular, are meant to address intellectual property theft, currency manipulation, and the trade deficit that the U.S. has been facing with China for years. The imposition of these tariffs has sparked fierce reactions both domestically and internationally. China, for example, retaliated swiftly with their own tariffs, which directly target U.S. agricultural products. And the European Union has threatened similar measures against American exports. The U.S. economy is experiencing significant internal changes due to these tariffs. While the Trump administration has argued that these tariffs will create jobs and protect U.S. industries, the reality is more complex. For many American consumers, the immediate effect of tariffs is a rise in prices. Importers who rely on cheaper foreign goods are now faced with higher costs, which are passed down the supply chain. This could lead to higher prices for everyday goods, from electronics to clothing. In fact, it's projected that the average American household will face an additional $1,000 a year in costs due to the tariffs on common goods, such as clothing, electronics, and home appliances. While this might benefit certain domestic industries, particularly those that compete directly with foreign imports, it also creates pressure on consumers who face higher prices. The added cost could decrease consumer spending, which is a significant part of the U.S. economy. Additionally, these tariffs are raising concerns about inflation. The Consumer Price Index, CPI, has already seen an uptick, and experts worry that inflation could rise further, pushing the Federal Reserve to raise interest rates. That could slow down economic growth, especially in an economy that has been heavily reliant on low interest rates to stimulate demand. Trump's tariffs are not just a domestic issue, they are causing shockwaves around the world. International trade is a delicate ecosystem, and when one country changes its policies so dramatically, the effects are felt globally. China, the European Union, and several other countries have responded with their own tariffs on U.S. goods. China, in particular, has retaliated by imposing tariffs on U.S. agricultural products like soybeans, pork, and corn. This has resulted in significant losses for American farmers who had relied heavily on the Chinese market. The International Monetary Fund, or IMF, warned that these retaliatory tariffs could not only hurt both economies, but lead to disruptions in global supply chains, further exacerbating inflation and trade imbalances. The European Union, as one of the largest trading partners of the U.S., in an unprecedented move, EU leaders are exploring the idea of retaliating with their own tariffs on U.S. automobiles and consumer goods. They argue that such actions undermine multilateral trade agreements and could lead to a fractured global economy. Countries like Canada and Mexico, who rely heavily on trade with the U.S., are being forced to reassess their relationships with Washington. The North American Free Trade Agreement, NAFTA, which was renegotiated as the United States-Mexico-Canada Agreement, USMCA, could now be in jeopardy as the new tariffs complicate cross-border trade and economic stability. As with any significant policy change, economists are split on the long-term consequences of Trump's tariffs. Some see the protectionist measures as necessary to restore U.S. manufacturing and reduce trade deficits, while others warn that they could have the opposite effect. Recent economic forecasts predict that the tariffs could trigger a global recession. According to J.P. Morgan analysts, the likelihood of a U.S. recession has increased to 60%, citing the potential for reduced trade and strained global relationships. They argue that while the tariffs may protect certain industries, they could hurt others, especially those that rely on international supply chains. In addition to the risk of recession, the World Bank and IMF have expressed concerns over global growth. The IMF's recent economic outlook suggests that the world economy could slow down as countries grapple with increased trade barriers. This is especially problematic for emerging economies, many of which rely on trade with developed countries like the U.S. The U.S. is not the only economy that could be affected. Global stock markets have shown signs of volatility, and there are fears that the ongoing trade tensions could undermine investor confidence worldwide. As tariffs increase, international firms that depend on seamless trade with the U.S. face rising costs and diminishing profits. The long-term impact of Trump's tariffs on the U.S. economy remains to be seen. One of the key goals of these tariffs is to revitalize U.S. manufacturing and reduce the trade deficit. In theory, by making foreign goods more expensive, American-made products become more competitive. However, history shows that tariffs do not always achieve the intended outcomes. Economists often point out that tariffs tend to raise costs for domestic consumers rather than boosting domestic production. While U.S. manufacturers might initially benefit, the higher costs for consumers could reduce demand for domestically produced goods. Furthermore, many industries rely on imported raw materials and parts. Higher tariffs could increase their production costs, leading to lower profitability. Experts also question whether Trump's approach will lead to long-term changes in U.S. trade relationships. If the tariffs persist, countries may look for alternative markets or shift their production away from the U.S., which could harm American exporters in the long run. Moreover, the risk of trade wars could escalate as countries retaliate with their own tariffs, further damaging international relations. As we look toward the future, the consequences of Trump's tariffs are still unfolding. On one hand, the tariffs are a bold attempt to reshape global trade and boost American industries. On the other hand, they pose significant risks to the U.S. and global economies, from higher consumer prices to the potential for a global recession. In the end, the success or failure of these tariffs will depend on how quickly the U.S. can adapt to a new, more protectionist global economy. Policymakers, business leaders, and consumers alike will need to navigate these changes carefully as the effects of these tariffs continue to unfold in the years to come. So that will be the end of this episode. Be sure to leave a like and subscribe to our channel for more content like this one. Thanks for watching.